Good morning. This is Mike Youngman, Chief Investment Officer for Ankerstar Wealth, giving you a weekend update on a holiday weekend. And today I want to hit the American dream. Is it out of reach? What are the components that are at least listed as the American dream? And then I'm going to hit on some of the things that happened this past week with Nvidia earnings, and then just look at a year to date how the stock market has done. But before I get started, I must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. So let's talk about the American dream. So this is something that I heard from when I was a kid, and it was, work hard and you'll accomplish your dreams. Back then, I didn't really think much about it. It was, go get your college, go get a job, and pay for things. What I like about this article is it breaks it down into the percentage of people that think it's possible and the percentage that think it's easy. And that's the tricky part. Is it really easy? So this article came out in the Wall Street Journal this past week, and they're finding that people are believing it's harder and harder, especially in the younger generations. So those of you that are already there, you're already like, I've accomplished the American dream. Of course it seems possible, but our youth, my kids, your kids, might not believe it is as possible. So, and the biggest one that we're hearing lately is home ownership, because guess what? The interest rates have went up in the last couple years. The days of the 3% mortgage on a 30-year that many of you are locked into don't appear to be coming anytime soon, and things are more like 6.5% or 7%. So that makes things just seem that much more impossible. And then the housing prices have went up as inflation causes prices to go up. So a couple things. So 89% said owning a home is essential or important to their vision of a future. Only 10% said ownership or home ownership is easy or somewhat easy. And I'm going to scroll down to this graph, which I absolutely love. I'm a graph person here. And on the left, I don't even remember what this kind of graph is called. To me, I want to call it like a spider web graph or something like that. But if you look at this, is this author's impression of what the American dream is. Financial security, comfortable retirement, home ownership, annual vacation, and children and marriage. So whether that is what you believe, that's what this author said. When I think of financial security and comfortable retirement, I immediately think, getting a good job, earning, a good amount of money on your skills and time. And that's what it leads probably to all three of those, including home ownership and even annual vacation. What I think's interesting is the outer side on the right, financial security, comfortable retirement, home ownership. Those are all, essential. People consider those essential. What I do kind of find funny is on the left, marriage and children are not considered essential. They're important. They're not in the important but not they're in the important but not essential category, which is true. And then annual vacation seems like it would be less important than marriage and children, but in this survey it is not. Now, what is easy? And that the reddish pinkish part on the inside says, what is easy? Getting married is easy. Having kids is easy. I should say easier. It's closer to the goals, where home ownership is difficult is what we're hearing. So things that are financial, guess what? Things that take time, like building up a retirement account or building up financial security, those things don't happen overnight. Where I'll just say that getting married and having kids can happen overnight. It shouldn't, but it can. So those are considered the easier things. So as you think about this, I just want you to think about where you are in life and your views on these 6 categories, and think about it for your kids or a younger generation. If you're not in that younger generation, how easy is that for them? And where do we go from here? I will say that putting back money and saving towards a comfortable retirement is something that could start in your first job. At 14 years old or 18 years old or whenever. Home ownership is probably a little later on. And when you feel that true financial security, is financial security meaning I have enough money in the bank now that I know I'm secure, or is it I'm on a path with a job that's going to build into my retirement and I feel financially secure, which means that could occur as, in your mid 20s or early 30s. You could say I feel financially secure where I'm going. So it's really a feeling and a survey. So I just thought that was very interesting. With that, I'm going to go to kind of the big news this week was Nvidia. And, most of you have probably heard of Nvidia. It's a stock that, initially did graphics cards and computers. But it is, if anyone has benefited from AI, which has been the talk for the last 2 years, it is Nvidia. They create the processors and the most advanced ones, and businesses are buying their processors. And when you type that little thing in ChatGPT to do something and it goes off and comes back with a picture or something, there's probably a Nvidia processor on the backside of that, probably. So when they come out with their earnings, this is it's either the second or third biggest company in the world. Apple's one, and this one's bouncing back and forth with Microsoft. So here are their earnings. And I'm going to highlight just kind of the key parts, and you just got to see how big these numbers are. They brought in $30 billion, and of that, 16.6 billion was the income. That was their profit. So if you had a company where you brought in $100 and it cost you $90 for your supplies and labor, you would make an income of $10. So that's like a 10%. Their net income is like 50%. So that is incredible. You can do that when you don't have an immediate competitor that's fighting you for price. And that's where Nvidia is right now. They do not have, people are obviously going to try to catch up to them, but they do not have that. So this company is worth a fortune, and they have shot up. Their revenue went up 122% from last year, from on the same time period. So basically more than doubled. I mean, that is incredible to grow that fast. So what happened? What did the stock do? And I'm going to show you. It actually went down. Not by a lot, by 4 or 5%. But with those incredible numbers, you can see on this graph, the stock actually dipped a little bit on the 28th. And, it's still, I'll show you the year-to-date graph. It's still done fantastic. So don't think that, oh my gosh, it's selling out. But it is basically priced to perfection. Everybody has been so impressed with this company, investors. The first 2 quarters of the year, they blew out earnings. They blew out earnings this time, but there's obviously some concerns on profit margin and things like that. And they even announced a $50 billion stock buyback. That means they're making so much money, they're taking $50 billion and buying the company back, or at least a little piece of it. So let's look at the year to date, and we are 2/3 of the way through the year. We're at the end of summer. And what I'm showing you on the screen here is a graph of the Nasdaq last year, because I want to show you last year's graph. Because last year when we hit in August and we hit in October, we had periods where this country's going into a recession. This things are getting worse. That was the feeling, and you can see the market sold off. But by the end of the year, the Nasdaq was up 40-some%. Wow, 40% in 1 year. So now I want to show you what the Nasdaq graph looks like this year. So this is this year through the end of August, and you can see it, a dip in April, and you can see a dip at the beginning of August. But right now the Nasdaq is up 18%. So if we locked in right now and said we're going to cash through the end of the year, you were in the Nasdaq primarily, it's up 18%. The S&P's up 15%. You'd say that's a great year. That as 18, 15%, those are great years. That's if you were 100% in the market. Most people are not 100% in. But so why don't we do that? Because if I go back to last year's graph, if we made that decision last year, let's say in October or November, we said, wow, it's up 30%, let's lock it in. You don't know what's going to happen from here. And you can see that when would you get back in? It went up through the end of the year and it went up all the way into this year. So We don't make decisions like that. That's market timing. That's not a game that we play. So anyways, I just thought I'd show you this, and your portfolio should be doing very, very well. It's not the Nasdaq's not at its all-time high. I think it hit it July 10th or so, but it's pretty close. I'll say once again, we're going into presidential time, elections, uncertainty. The market could be volatile. You see volatility at the early in August. A lot of times we see volatility as buying opportunities. I know that when it dipped in August, we added good sized positions of Nvidia to our models, and they're up 15%, even with last week's little bit sell off. And then the last thing I want to cover is kind of like, why do we think that there's opportunity going forward? Isn't everyone aging, and the younger generation is concerned about that American dream? And what I'm going to show you is a graph of money that's in the money market accounts. So one of the things with the high interest rates, and most people say, well, high interest rates are bad, bad, bad. They're not necessarily bad if you're sitting in cash. So if you were in cash 10 years ago and getting less than 1% on your cash, that's pretty bad. Be like, oh, I'm only getting 1%. Oh, that's crazy. Well, with the Fed raising the rates, you've been able to get over 5%. And what's happened is the amount of money in money market funds, you can see it ramp up on this screen up to over $6 trillion. So $6 trillion is sitting in things that are basically cash. It's not pure cash, but very short term, no risk or very low risk investments that are earning 5% or more, right around there. What happens? The Fed is about to cut rates. We heard earlier a week ago, and we see every indication the Fed is going to start cutting rates in September and will continue on through this year and into next year. When the interest rates come down, will people sitting in money market accounts accept 4%, 3%? Is that going to be acceptable? Or, the 5% days will be gone. What happens with that money? And I know Steve has said before, money's it's like water. It's going to flow from one area to another. Now, it could flow into real estate. It could flow into rare art. It could flow to bonds. It can flow to the stock market. And some of that money will flow there. Now, some of the money is, someone that's older and they're just going low, no risk the rest of their lives, and they'll pass it on to their heirs. And then their heirs might put it in the stock market. So it's a long-term process. But the bottom line is the money market accounts are at an all-time high, over $6 trillion. And as the Fed cuts rates, some of that money is going to flow other places. And that's part of the reason we'll expect to see the stock market go up. Now, does it go up in the next month or the week? We don't know. But over the long term, it does. And that's kind of why over a long term, 50 years, the stock market has always went up. So anyways, I wanted to close with that. I hope you have a great holiday weekend and look forward to seeing you later. Have a good one. Bye.